Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. United States CPI surprises to the upside again in August, paving way for jumbo Fed hike. Investing.com, United States inflation turned out slower than expected yet again in August, paving the way for another big hike in interest rates from the Federal Reserve when its policymakers meet next week. The Consumer Price Index rose 0.1% in August and was up 8.3% from a year earlier. The Bureau of Labor Statistics said in Thursday analysts had expected prices to fall by 0.1% thanks to the steady decline in gasoline prices from their summer peak. However, that factor was overwhelmed by big increase in the less volatile elements of consumer spending. The so-called core CPI rose a thumping 0.6%, twice what was expected, driving the annual core inflation rate up to 6.83% from 5.9% in July. That's the highest it's been since the fourth-year high that it hit in March. This is a much worse CPI report that anyone was expecting, tweeted Justin Wolfers, a professor of economics at the University of Michigan. The decrease in headline inflation due to lower energy prices is there, but the underlying rate-based proxied by core inflation is running a fair bit higher than anyone forecast and most of us hoped. Gasoline prices fell 10.6% during the month, but what was partly neutralized by a rise in natural gas and electricity prices, indirectly driven by the energy crisis in Europe due to Russia's war in Ukraine. The effect of cheaper energy was then completely overwhelmed by rises in the prices for housing and medical care, which rose 0.7% and 0.8% respectively. While the current surge in inflation may have been first seen in energy prices, it has now become increasingly entrenched in other areas of spending. Only two sectors, returns and education, are now showing annual inflation rates of less than 5% according to Ad3 ISE strategist Mark Oswald. The dollar intensely gained more than a cent against the euro on the news as market participants moved the price in another rate hike of 75 basis points from next week's Fed meeting. The same calculation sends stroke futures into reserve, leaving Dow Jones futures down 1.8%, S&P 500 futures down 2.3%, and Nasdaq 100 futures down 2.9%. All three had posted solid gains on Monday and had been on course to extend those gains before the release. Crude oil futures, which had risen in the last couple of days as a dollar weekend, also went sharply into reserve, falling by over 1 barrel to be down 0.7% on the day, while gold futures fell 1.5% to hit their lowest in a week. Both oil and gold tend to reach negatively to raise interest rates, a trend that seems set to continue when the Fed's Federal Open Market meets again in a week's time. Markets are likely to fret about 100 basis points hike at next week meeting. Oswald wrote in a note to clients. He notes that market participants have again been guilty of going down the long-time habitual roads of beetle positives are again being derived by reality. Dow futures rise 215 PTS. United States CPI report looms large. Investing.com, United States stocks are seen opening marginally higher Thursday, with investors cautiously awaiting the August Consumer Price Index release, which is likely to set the tone ahead of next week's Federal Reserve policy meeting. At 7 AET, 11 GMT, the Jew futures contract was up 215 points or 0.7%. S&P 500 futures trade 28 points or 0.7% higher. I think that's all from me. Don't forget to like, comment, share, and subscribe.